U.S. stocks rallied, ending the week on a high note this Friday. The boost, all thanks to Ben Bernanke. Investors were reacting to a letter sent by the Federal Reserve Chairman to the Chairman of the House Oversight Committee that said, quote, "There is scope for further action by the Federal Reserve to ease financial conditions and strengthen the recovery." And those words spurred a rally. The Dow Jones rose 0.7%, the S&P 500 climbed 0.6%, and the Nasdaq gained about 0.5%. Still, all three major indices failed to log gains for the week overall. And all this talk of stimulus continued to push gold higher. Gold futures edged up after hitting the highest level since April in Thursday's session. While orders for U.S.-made long-lasting items ranging from planes to toasters, known as durable goods, soared in July by the biggest amount since December. That seems like a positive headline for the health of the U.S. economy, but if you dig a little deeper, the report actually shows weakness, not strength, in America's manufacturing sector. Excluding transportation goods, orders actually fell 0.4% last month. Karina Huber has more.
President Barack Obama has made U.S. manufacturing a key component of his economic recovery plan. New data doesn't bode well for his strategy. Orders for durable goods rose 4.2% last month, a nice headline, but overall orders were largely driven by demand for one product, airplanes. Boeing got orders for 260 planes in July. In June, it only had 24 orders. The market tends to focus on orders excluding transportation. That actually fell for 2 consecutive months.
New order growth has been slowing and is now negative, while inventory growth continues to expand. This is the kind of diversion that often gets you into recession at some point down the road, because production then has to slow up in order to basically bring down unwanted stocks.
Economist Christopher Rupke agrees this report could be an early sign of recession, but he isn't prepared to bet on it quite yet.
This number has a tendency to get revised. It is called, quote unquote, the most volatile number out there for the monthly indicator. So it's important information, but let's give it a couple more months.
Economists say the drop in orders for U.S. manufactured goods is a reflection of the economic slowdowns in Europe and Asia. Weaker economies there have led to less demand for U.S. exports. The report is closely watched by America's central bank. The Federal Reserve sharply lowered its economic outlook in June. Now the market is speculating it will ease monetary policy. In a letter to Congressman, Fed Chief Ben Bernanke indicated he was open to the idea. He wrote, "There is scope for further action by the Federal Reserve to ease financial conditions and strengthen the recovery."
In a week from now, Bernanke will be speaking at an annual central bank conference in Jackson Hole, Wyoming. It will be the next opportunity for him to make a big announcement, so the market will be paying close attention to everything he says to get clues on whether he thinks the U.S. economy needs another injection of stimulus to get back on track. Karina Huber, CCTV, New York.